All right, you're good to go now.
Okay. I just need to know if there's any technical explanation for what happened with US 30 in the afternoon today.
No, really, it's just market structure. We're gonna go through that right now so you guys can
Okay.
understand exactly what
Okay.
happens,
Thank
but
you.
it's all market structure.
Yeah. Okay.
Market's
Okay.
been going up like crazy. Market had to do a retracement. Well, pullback, that's something that mainly was about to happen, at some point. And that's what happens today.
Mm, okay.
But we're gonna go through that and explain exactly like what would have been the best entry and everything uh when it comes to this. So any questions regarding what we went yesterday, liquidity, order block, type of entries, anything?
No, I think we're good. We just need some practice with time and we'll be good to go.
Some
Yeah, for
examples,
me,
yes, like for
yeah.
short
So,
and long positions.
All right, cool. Yeah, we're gonna do that now. So we're recording here. So today we're gonna go into like the first topic. We're gonna take that out of the way. We're just gonna be risk management and also the trading plan, which is gonna be like the time to trade and all that, okay? And then we're gonna go into examples, applying, the trading plan and everything, okay? So when it comes to trading plan or risk management, a lot of people talk about that, but a lot of people don't apply it the right way, or they just know that they have to be, they have to manage their risk and everything, but never do that. So they never do that. So it's just like we say it, but we don't apply it on the real market when we trade in. We just over trading and all that type of stuff. So when it comes to like risk management, I like to do always like a simple example, like having, a certain type of like a number of trades that we're gonna be taking for a week or for a month or whatever. And you guys are gonna see exactly what I mean by this when we go through that right now. So let's do an example that we're gonna have $100,000 account. It could be a funded account, it could be a challenge, it could be your own money, whatever, right? So we're gonna do an example of 10 trades, okay? We're gonna do a 1% per trade, right? Risk. So we're gonna be risking $1,000 per setup or per trade. Okay. We're gonna do like we're gonna have a 40% win rate. Okay. Meaning on my strategy, that's horrible. Okay, but we're gonna do the worst case scenario here, and we're gonna do 40% win rate. Okay. And we're gonna go for a minimum of 1 or 2 right here. Or if you guys want to close partial, right? We're gonna do 101 closing partial and going into the final TP 1 or 2 to hitting TP2. Okay, that's up to you how you manage your how you manage. I always try to always recommend you guys to go for the TP2 most on your trades if you can. And if you're gonna be closing partial, then close less than 50%. So when you hit TP2, you're hitting, you're getting close, the more close to the 1 or 2 here on your account, if it makes sense. So right here, as I said, we're gonna do 1 or 2 minimum take profit. That means we're gonna be risking $1,000 and we're gonna target for 2,000. And we're gonna go, as I said, 40% win rate. Okay. So that means that out of 10 trades, we're gonna be losing 6 trade. Okay. That's gonna be $6,000 as we're risking $1,000 per trade, and we're gonna be winning 4 trades. In this case, gonna be uh 4 trades, basically going for $2,000. That's gonna be $8,000 for the week, for the month, or how many trades you take, even if it's a day. But I don't recommend you guys to do so many trades in a day. But that would mean that we're gonna end out the week or the month with a $2,000 profit. You guys can see here that we don't need to be perfect. That's the first thing that you have to keep in mind. That win rate that people just try to get over and just worry too much about it. Like, oh, I have to be perfect. When you try to look when you try too much about the win rate, it's because you want to be perfect on the market and you don't want to lose. You are afraid to lose. And a good trader is somebody that actually allow themselves to lose on the market and they're okay with that. What you have to make sure is that you manage your risk at all time, that you don't do over trading, don't over leverage your account. Don't move your stop loss unless you have like a minor, maybe give it a 10 pips like I do, but not like a lot of people do. Like, okay, it's gonna stop me out. I'm gonna start moving my stop loss and more and more and more. And instead of losing 1,000, they end up losing 2,000 when they don't have to do that. So by having just a good win rate, I mean a horrible win rate in this case, right? You're still making $2,000 by going from a minimum of 1 or 2 and basically risking $1,000. With this, what you have to make sure and understand is that you don't have to be perfect on the market. We don't have to be, and we cannot, we don't have to try to be perfect. We just have to make sure that we just find the best setup based on the strategy and apply our risk management and let the number do the work. At the end of the week, at the end of the month, if you follow your trading plan, and you follow the strategy, you're gonna end up in profit. But if you start over leveraging, if you start over trading, and you start just revenge trading every time you're losing a trade just because you don't want to accept that loss on that day, that's when you're gonna start even having a good strategy, a good trading plan. That's when you're gonna be still losing money, and you're not gonna know exactly why. But the reality is because everything is based on the risk management and your trading plan right here. Okay. So as you guys can see, $2,000, even though we have a 40% win rate, as I said, it's a bad win rate based on my strategy, based on my numbers, and a minimum of 1 or 2. So that means that even though we have a horrible week, a horrible month, if we manage our risk and we follow our trading plan, what we're gonna go through right now, we're gonna end out in profit at the end of the week or at the end of the month, and that what matters to us. So just take that out of your head that you have to be perfect, that you have to have an 80% win rate. That gonna comes with time, and that's gonna be there because I have a 78% win rate, and sometimes I even have 85%. There's week that I don't lose trades, but there's other weeks that I might lose one trade, but at the end of the day, I don't really care about the win rate. I care about ending in profit. And to ending in profit, that means you have to have a good risk management and managing your trading plan, which means that don't overtrade it. Don't look for more than one setup maybe a day after you're making profit, which happens a lot with a lot of people that you're making money and you end up with a 1 or 2 in a day and you're still trading. I mean, if you already make money from the market, why do you have to be keeping looking for new setups? Because if you do that, most likely you're gonna start losing the money that you already made on the market. And when you lose the money, then you want to try to get it back. And that's when you go basically downhill and you start losing money. And starting a day that you end out in profit, you're gonna end out that day at the end of the day, basically minus when you were up a couple of thousand, a couple of hundred, depending on your account. Okay. Everything makes sense here for you guys, right?
Yeah, I
Um,
have a question about the partials because I was thinking about it. So, do you recommend it more when you have a big account capital to close partials? I mean, if you go
That
for
that
one
that
to
I
two in
mean,
the
when it comes to the partial, all depends how good you are or the not. I mean, how often you hit TP1. I think like that's what it have to. Everything has to come, to a conclusion or when actually closing partial means. Because if you're hitting TP1 more often, let's say 80% of your trades you're hitting TP1, then definitely you need to see the market closing partial. Not too
Mhm.
much. I don't recommend you guys to close like 80% like a lot of people do, but that's up to you. Like I said, you can still make it work if you close 80% on the 101. But I always recommend you guys to close partial, meaning less than 50% on the TP1 and leave the rest run to TP2. Okay? But most of the time, what I always recommend, and that's something that I do on my own because when I'm trading live with people, most of people don't know how to trade and they just want to make money. And if I just try to go for TP2 every time and I see TP1, for example, get hit, if they don't make money, they losing money. That's basically how people think when they join a group. So when it comes to do trading with people, you see that I trade and I close partial on TP1. But on my trades that I do by myself, which I do, I go for TP2 most of the time. I don't close partial.
Yeah.
I just go for 1 or 2 minimum because
So
I want to have a better, risk and reward when it comes to my trades or my account.
So I was thinking maybe in that case, if you have okay, let's say 50% win rate, instead of closing partials, would be more smart to move to break even in TP1 and
Yeah,
let
I
it
mean,
run to
that's what
TP2.
I do. That's what I do.
Perfect.
Like I
Okay.
said,
So,
I do on the live trading group because
mhm.
80% of the person that are there, they don't know how to trade. They only want to make money. So when I get to TP1, I make them close profit here, so they feel that they're making money, and at the end of the week, they're still making money. But for me, when I'm trading, I'm following my trading plan, which is gonna be 1 or 2 at the end of the day. I want to follow that trading plan. That's what I want you guys to do. Always try to go for the minimum. That's what I said, 1 or 2, because that's what will help you to be more consistent along the way. Don't get me wrong, you still can make money when you get to 101, but you have to close partial and then let the rest run through TP2. Not like a lot of people do, which is also you can be profitable, but closing a 101 everything is going to be more difficult for you to be consistent, because if you make 101 and the next day you lose, then basically you're basically a break even back again. But if you do 1.7 or 1.8% on your account by closing a 101 some partial and leaving the rest to TP2, and then when you get to TP2, then you're going to close maybe 1.5, 1.7, 1.8, depending on how you manage your close on TP1. And that means that you have to lose 2 times in a row to basically be back again to break even, or just couple thousand or couple of hundred down on your account. I don't know if it makes sense for you guys.
Yeah. Plus, can I say something?
Yeah, go ahead.
Okay. So basically, I've been 2 months on your live trading and on Discord. Some difficulties, honestly, we're all going through, and we're having side talks, to be honest. Like sometimes when we're going through a trade and like let's say it's 7 to 10 pips above your entry point, and like you say, let's open a couple of positions here and go straight to TP1. So we're like working on 0.5% here. And on the other side, when we go for a retest or a pullback, and we enter all our full positions, and lately it's happening, we're going for stop loss. So we're losing around 60 pips and not 40 pips. And I'm gonna tell you why. First of all, sometimes you stretch your stop loss another 10 pips, and the entry is always 7 to 10 pips above your entry point, because we were waiting for the confirmation.
That depends. I know what you're saying, but all depends. First of all, when I do my entries, it seems like all depends on your broker. But let's say I do an entry here. This is our entry point, right? I'm gonna, let's say market go here, I enter here, right?
Yeah. Okay.
Right. So when market do the retest, I enter more positions here, right? So I'm gonna do my stop loss based on my last entry. So instead of being here, my stop loss, which is gonna be the one that are based on this entry right here, I'm gonna put a stop loss here that are based on this one right here. But if I don't open positions just like crazy, like 1, 2, and 3. Everything is calculated based on percentage. So if I'm gonna be risking on my trade 3%, even if I open it here, my 3%, I divide that percentage on multiple positions. So here I enter 2 positions, and here I might enter, let's say, 3 positions, let's say, right? But these 5 positions altogether are the same 3% that I'm looking to risk on that trade. I might lose a little bit more money. Maybe, let's say you're risking 1,000, you might risk $1,100 more when you do it like that. But the thing is, if you do it like this, that you enter 5 positions here, and when you do a retest, you want to enter 5 more positions here without doing it like based on percentage and risk, then definitely you're gonna be losing more when you do a pullback right here, because you're adding a lot of risk here and a lot of risk here. I don't know if it makes sense.
Yeah, it makes sense. But like what you're saying, I totally agree. But most of the time when we're entering here, let's say, and because of the perfect setup you're having, we're going straight to TP. And our TP is basically only 30 pips in this case, because we're already 7 to 10 pips above your entry point. So you get what I mean? It's like I have to win 2 times the 30 pips to cover one loss of 60 pips. That's what's happening, Blood. I'm being honest with you. That's what we're suffering lately. One stop loss is costing us 2 wins
But
from
that's
your side.
all. That's basically because of your broker. There's nothing I can do if my broker, when I enter, let's say I have only 2 pips of different from here, and when you enter your broker have a difference of 20 pips. There's nothing I can do about that. I don't know if it makes sense, because at
Do you
that point
think,
it's not
at this
even
point,
about the entry. It's about the difference between the pips that you have. Because most of the time when I do my entries, what I have a difference is the 5 pips, 6 pips from the entry point. But if you have
yeah,
20 pips difference, it's because of your broker, not because of the entry. I don't know if it makes sense. So at
yeah,
that point, you have to work on finding a broker that doesn't have a spread like I have. And that's why my entry sometimes ain't always gonna be like that. That when I enter, there's gonna be a difference between you and me. And especially if your broker have a difference like 20 pips, mine doesn't have a spread. I base on commission. And that's why if I enter my position, I'm gonna be like, say, 5 pips from here from the entry. But if you have a spread and your broker is literally having a huge difference, then you're gonna have a 20 pips here, even though you take it here because of the spread. And
yeah,
there's
exactly.
nothing I can
So
do
the
about it.
entry
I don't
is
know if it
higher.
makes sense there.
Yeah. It makes sense. It makes sense.
All right. So it's all about the broker. Even though if I take you a trade right now, enter here, and you enter it here, if you have a broker that is literally killing you with the spread, then your entry is going to be here, right here, 10, 15 pips differences, which is crazy. You know, that's what I recommend everybody when you're going to do training. And basically, I always recommend to go based on commissions, and better to not have a spread. So that way your entries are going to be way better, and you're going to be literally the same way that I'm trading when it comes to my entries. But if you have a difference of 20 pips, 10 pips, 15 pips on your broker, no matter when I enter or where I tell you to enter, the difference between you, my entry, and yours are going to be huge, because you're going to have 15 pips different from the one that I have on my broker. You know what I'm saying?
Yep.
What I do in this case, based on your win ratio, as we are trading, following your trades is easier. I usually put same stop loss as yours, and the TP, I use the TP2 based on the pips that it takes me. Because even if you say 30 pips, as he said, if I put same stop loss as you because of the spread, my stop loss is going to be 40, 50 pips.
Because it's gonna
So
be a difference. That's why I said 40
yeah,
pips out of the T or your entry. That's what I don't say. My stop loss is gonna be this one. I mentioned my stop loss because some people like to know my stop loss, but I don't say put your stop loss here. Say 40 pips stop loss. That means that you have to put your stop loss. If you have an entry here, your stop loss have to be 40 pips out of your entry. Makes sense?
yeah.
Right. So like I said, the only way for you guys to have the same entry that are going to have is basically having no spread on your broker. And still there's going to be a difference of a couple of pips, but not like you said, like 15 pips, 20 pips difference. And that's a crazy thing. Then you have to work on finding a better broker that doesn't do that many spread on your entries. Okay.
Do you mind?
Oh,
I have a question. Like,
go ahead.
with regards to your broker, do you have a broker? Do you have a broker that's? I mean, I noticed obviously your videos and your highlight clips. You know, when you show your results, it look like it's a MetaTrader 5 or 4. I'm not sure. Do you have a
5.
that support that? Because obviously I'm in the States. I'm not sure where you located at
I
the
mean,
moment.
the way that I do that is because I have 2 nationalities. So I create my accounts on a broker that doesn't do US clients, and I did
Gotcha.
it with my other nationality. So that's why I can use still Meta 5. I can do just this broker that US clients cannot do it, because I'm using it like I'm using the account like I'm not in US, basically, kind of. If it makes sense.
Yeah, that makes sense. I got you.
All right.
Thank
But
you.
anyways, guys, like I said, you have to make sure it's like when it comes to risk management, the 1 or 2 have to be something that you have to get the most of the time. Yeah, you can close partial, on your entries, but never do like 80%, 70%. Try to do less than 50%. So you most of the time are doing more, getting more positions to TP2 and having way more close to the to the 1 or 2 here on your setup, because that's gonna get you more consistent along the way. Like I said, you don't have to close partial on TP1. You can go into TP2 and hold it if you want to do that. But that doesn't mean you're not going to be profitable if you close partial on TP1, because still, I've been trading for 4 months on the group, and everybody that has been trading with me has been making money by taking profit on TP1. But that's all going to be based on your win rate at that point. You know, if you have a high win rate, then the TP1 is fine for you. If you have a 70% win rate, for example, if you close at TP1, all your position, you're still gonna be profitable. But when you hold your TP, your trade to TP2, you don't have to worry too much about that win rate. Even though you might have it, but you can relax, because you still know that even though you have, a decent win rate, you still be making profit at the end of the week. That's why we're gonna be. We just focus on try to do minimum of 1 or 2 here as our final TP, or you can do even more, 1 or 3 if you want, but minimum is have to be 1 or 2. Okay, make sense?
Yep.
Any questions regarding this or not? No questions? Okay, cool. So when it comes to the trading plan, right here, we're gonna talk about the time that we're gonna be trading, the stop loss and everything that we're gonna do for our entries. Okay, so for goal, where is the type? Goal, we're gonna do goal. The time to trade is gonna be between. I used to do 8:30, but now I'm trading after 9:30. Basically the same time that we're gonna be trading New York after the opening, because at 8:30 there's always news, at that time. Most of the time the news are between 8 to 8:30. So if you're gonna be trading, it's better not to trade on news. Okay, so on goal we're gonna do 8:30 all the way up to 12 p.m. That's basically the window that we're gonna be looking for a setup. Okay, 8:30 to 12 p.m. Eastern time. Okay, that's gonna be Eastern time, just to make sure. Okay, Eastern time. When it comes to the stop loss, okay, we're gonna do 25 pips stop loss on normal days, and 30 pips stop loss when there was news or it's a news day. It could be CPI, it could be the poet is talking, the Fed is doing a speech, that we have red folder news. At that point, we're gonna do 30 pips because market's more volatile, and we want to try to do, give it a 5 pips more breathing room when it comes to the stop loss for goal. Okay.
If the news are,
go ahead.
Sorry, Vlad. If the news are after, before that you're trading or after, it doesn't matter if it's a news day. For example, if it's the news are at, however, like today was late in Spain, 6 o'clock in the afternoon.
No. So even though, like, first of all, I don't, I trade, I'm gonna tell you now. I'm gonna put it here so you guys can know. But I stopped trading 30 minutes before news. So if the news is at 10, I don't gonna be even if I have 9:30, I might see a setup. I don't take it because most likely market's not gonna perform or doesn't gonna move the way that I want in 30 minutes. So I don't trade it before 30 minutes before news, and I traded 5 to 10 minutes after the news. Okay. So if you're trading before news, then you can still, if you still like have enough time to trade it, like say the news is at 12 and you're trading at 9:30, then you don't have to use the 30 pips. But if you trade it after the news, then definitely you have to use the 30 pips stop loss. Okay. Let's go here. So as I said, I see a question here about the broker. So there's a couple of them that I have used that works great. So I have Black Bull Market. It could be FX Choice or Eagle FX. There's three ones that have a great spread when it comes to, they don't have a spread most of the time. If they have, it's just a minimum spread. Okay. But that's for people that can have dual citizen, so they can
Could
can
you
do it like
repeat it,
that.
please?
FX Choice, Eagle FX, and Black Bull Market. That's the ones that I have used that basically they don't have like literally almost not a spread. Okay. If you want to do like no spread, because I do commission based on commission most of the time. So okay, so when it comes to take profit, okay, I'm gonna go into that right now. So we're gonna do 1 or 2 minimum here, guys. As I said, for TP, 1 or 3 is ideal. You know, you don't have to hold your trade to TP3 most of the time, but if you have one day and you want to hold it, that's good, a good thing. But we always have to go for the minimum of 1 or 2. That's what we have to go for. You're gonna be super profitable and consistent if you hit 1 or 2 most of the time on your trades. Okay. And that's what we're looking for, consistency. And 101 is going to be our break even. This is going to be depending on the market, because sometimes market can be a little bit choppy and you get on the trade and the market, let's say, goes 0.70 or 0.80, almost getting, you know, to that TP1, you can move yourself to break even. All depends on how market's moving. If market is close to a level that you might see, okay, you know what? I have to be aware of this level. I'm gonna put myself on break even, you know, a little bit more sooner than the TP1. That's gonna be up to you, but that's the way that I do it. I always try to make sure that I don't gonna be putting myself on break even like 10 pips after market moving on my favor. Hell no. But let's say that I'm doing one in the example of gold, I'm going for 25 pips you know, take profit as I do 25 pips stop loss. If I'm already at 19 or 20 pips in profit, and I know there's an order block there, I know there could be something that it might be choppy the market, then I pull myself and break even though we haven't getting to the TP1. But I do it almost getting a TP1. I don't know if it makes sense. So it doesn't have to be like, oh, 10 pips, I'm moving myself to break even. No, you have to give it room for the market to move, and you're gonna put yourself on break even when it's getting almost close to the TP1. That's only if you want, you know, if market's choppy, there's an order block, there's things that you might have to be worried about on the trade, okay? So that's gonna be our break-even point, 101. Like I said, that's gonna be optional for you. You can change it. And trades that we're gonna be taking a day, I recommend you guys to do 1 or 2 maximum. Okay. I always recommend 1 trade per day until you get consistent. Because when you do a 1 trade per day, that's gonna help you to be more disciplined and more organized when it comes to taking a trade. Because what happens when you look for multiple setups a day, you stop being picky and you start looking for any setup. And you might, you know, be kind of, you're not going to be looking for the best out of the best. So if you have 1 trade, you know, you only have 1 shot. So if you have one shot, you want to make sure that you take the best setups. That's why having 1 trade per day could be the best way to go when you're trying to get consistent first. Once you get consistent, that you know your win rate, that you know that you're good, that you know that everything is on your favor, then you can do 2 trades per day. Okay. But I recommend you guys to do 1 or maximum 2 a day. Okay. And when it comes to the news, we are not going to be trading 30 minutes before. Trade before 30 minutes. Okay. And traded 5 to 10 minutes after the news. Okay. That's basically how we're going to do it. Okay. So like I said, example, if we have news at 10 and we are 9:30 and there's a new at 10, a red folder, right? I'm not going to take that trade and I'm going to wait for 10:05, 10:10 to start looking for a setup. Okay. And most important thing here is the liquidity. The liquidity grab, right, had to happen after 9:30. Okay. After 9:30. If it happens before 9:30 or happen let's say it happens 1 minute before, let's say 9:29, you're not gonna count that liquidity grab as valid. You have to wait for 9:30 to hit and then look for a setup or a liquidity grab after the 9:30. I don't know if it makes sense for you guys here. Does it make sense for you, the liquidity thing here?
Yes. Mhm.
All right.
But why?
Because you don't want to be part of the liquidity, especially when it comes to gold. 9:30 is gonna be the opening of the market, right? So it's the same thing as US 30 and NAS. It's gonna be the opening, of the market. So you don't want to be caught into be the liquidity. So that's why you guys see me that I always start looking for setups after 9:30. So I have to wait for the liquidity to happen, and then I start getting involved into the market, because the first 15 minutes, literally, of the market open is crazy, and you don't want to be involved into that. So you have to always wait for 9:30 to hit, and then start looking for the market to grab liquidity and look for a setup. Okay, that what works for me. Like I said, I recommend you guys to do the same thing, because if you take it before 9:30, most likely you're gonna start being the liquidity more often than you think. Okay, so that's gonna be for US 30. For gold, for US 30, I mean that's for gold. US 30 and NAS, just basically the same. We're gonna do the same thing, 9:30 a.m. to 2:30 p.m. Eastern time. That's a window that we can look for a setup. The stop loss on US 30 here, the stop is gonna be 40 pips. The stop loss on normal days, okay, and 50 pips.
Sorry, I interrupt you, but in gold is from 9:30 to 12
p.m.
Oh, okay. So US 30 is later, no? You can.
Yeah, because what happens with gold is that after 12's kind of dying the volume, but US 30 is basically a market on the US. So it basically have volume the entire day, kind of. But I like to just give it until 2:30 window for me to look for a setup. Okay. So as I said, 50 pip stop loss is gonna be on news days, the same thing, 10 pips more. On NAS is gonna be 30 pips, stop loss normal days, and 40 pips on news days. Okay. We're gonna do like same thing. We're gonna do 1 or 2 minimum, 1 or 3 ideal, 1 or 1 break even. Trades a day, you already said, I already know, 1 trade or 2 trades maximum. And we're gonna be looking at not trading 30 minutes before news, 5 to 10 minutes after the news. And liquidity grab had to happen after 9:30 right here. Okay. 9:30. Everything is clear here for you guys. The timing, the hours, the stop loss, the take
Yes.
profit, everything.
Yeah, that's clear, Vlad, regarding the NY session. But let's say here, like I'm in Dubai now, and it's like 4:38 now in the morning. What time do you think it's good to trade Asian session, London session, or like you don't recommend this?
If you're gonna be trading Asia, I mean, I'm only gonna be trading gold on Asia. So I do 10 here. If you're gonna be trading Asia, I don't trade London, but Asia, it will be after 10 p.m. Eastern time. Okay.
Okay.
In London, it have to be at the 3:30 because that's the opening is at 3. So I recommend you to do 3:30, kind of the same thing that we do in US, 9:30. So 3:30 will be the best to look for a setup on gold.
Why do you trade gold in Asia instead of New York? Why do you trade gold on Asia?
Because I like to just go into one pair position. It's just a thing that I like to do. To be more organized, don't have to go over too many pairs at the same time. So I try to do like one pair position. So I just focus on Asia, on gold in Asia. In New York, I work more into US 30. If I'm gonna do US 30, if I'm gonna do gold on New York, then more likely I'm not gonna be trading US 30. Kind of.
Is low volume, isn't like so little volume on Asia?
I mean, there's not gonna be like the same thing as New York or London, but you guys already saw me like taking good trades on Asia. So I take good trades. Maybe it happens 3 times a week, maybe 2 times a week. But when they happen, you can make a good money because it moves it's lower, but it has like good movement that you can make good money if you know how to trade it. You guys already know how to trade it with the strategy. It's all about waiting for the liquidity grab and waiting for the timing. The time is gonna be crucial for you to look for a setup, because when you look for a setup, we're looking only the setups on the prime time when there's a lot of volume on it. There's more liquidity, there's more volatility. So when we do that, we just wait for the market to start moving, give us the direction, and then we follow the market by just applying the strategy. Okay. And that goes with any pair that you're gonna be trading. If you don't want to trade gold, US 30, and NAS, you can trade GJ or any other pair. Just make sure that you're trading it on the right time, on the time that has more volume on it. Okay.
Okay.
So everything is clear here for you guys. So Asia have to be after 10 p.m. Eastern time. Okay. US 30 is only going to be New York and NAS as well. New York time, New York session. Okay. So on the blueprint side, when it comes to, okay, what we're going to do, what I have to do, like a step-by-step thing to look for a setup. Okay. I like to do it like this. Number 1 is going to be my bias. So we already talked about bias. We need to see the 4 hour, 1 hour in our favor. So I'm looking to know if we're looking for buys or sales. If market's in a buy or in a sell, that's good to go for us. So that's gonna be our bias. Second, we're gonna do our markup. So we're gonna be order block markup and liquidity levels. Okay, we're just gonna go through examples right now, but order blocks and liquidity. Number 3, wait for the time to trade. Okay. So that means if you're going to be trading gold, 9:30. If you're going to be trading US 30, 9:30 and up. Okay. Number 4, wait for market to grab liquidity. Wait for liquidity. Okay. Always wait for liquidity. Number 5, tapping into an order block. And number 6 is going to be basically the break, the minor break or price action. Okay. Which is going to be a small break. That's basically what I'm looking for when it comes to look for a setup every single day. Number 1, look for my bias. I want to see where market is. If I'm looking for buys, I'm looking for sales. Second, I'm going to do my markups. I'm going to look for my order blocks that are near to the price. As I said, if market's like, I don't know, in 100 and you don't want to do a order block in 50 because it's too far away from the price. So we're going to look for those most recent order blocks are near to the price. We're going to do the markups, the liquidity. Then we wait for the market to the time to trade, which is going to be 9:30. And then we wait for that liquidity grab. These 3 steps have to basically be there for you to take the setup. If the market grab liquidity and didn't tapping into an order block, there's no setup. If the market tapping into an order block and it didn't grab liquidity, you don't take in the setups. Everything have to be there. Liquidity grab, tapping into an order block, and then give you the price action, which is going to be the break. And that's when you can take the trade.
Is that sorry for interrupting? So the liquidity grab, so you need to be in this exactly order, because today when I was trading gold based on yesterday setups, I had an impression that they grabbed liquidity first, then they had a break of structure, and then they tapped into the order block. So it doesn't matter in what order they're gonna.
I mean, most of the time when market grab liquidity, it's a pullback, because like say that you do something like this, and if you grab liquidity, more likely you do a pullback and go to an order block. So most of the time we follow like the Sen order, like liquidity grab, tapping into an order block, and then minor break, because it's gonna be kind of difficult the market do this, tapping into an order block and then do liquidity and then go, right? Because most likely if you grab liquidity, you're gonna tapping into an order block because it's a pullback. I don't know if it makes sense. So for me, it's like the same order that I have here: wait for liquidity, tapping into order block, and then the price action. Same thing that what we saw yesterday on the type of setups. You guys can see that we look at liquidity first. Okay, fine. Order block tap second, and then the price action, and that's gonna be number 3. Okay.
Okay.
It would be nice if we could manage to see some examples today as well.
No, we're gonna do
Yeah.
that definitely. So
On gold, maybe if you can.
yeah, we can do
please.
that. Any questions for so far here? Oh, no questions. Everything is clear.
Yeah,
Okay.
clear. You prefer to look at 1 hour and 4 hour chart, right? For the bias and the
Yeah, that's
setup.
gonna be 4 hour and 1 hour. Like I said, if you're still not confused on that, go to the first video. But I'm gonna remind you guys here.
No, it's fine. Just
No, but
confirming.
no. That's fine. It's like I said, 4 hour bullish, 1 hour bullish. We're looking for bias 100%. Okay, 4 hour
Okay.
bullish and 1 hour downtrend. We can look for sales momentarily, but we're still looking for bias because the 4 hour is gonna be our main structure. If 4 hour is bearish and 1 hour is bearish, we're looking for sales 100%. If 4 hour is bearish and 1 hour is bullish, we can look for possible buys, but then until get to our certain levels, and then we continue looking for sales because 4 hour is going to be our main structure. Okay, so that's how we're going to find our bias. Okay, so for example, today we're just going to clean this up. We're going to go here. Boom. Fine. So right now here, what we're looking at is a structure. I want to see my bias. So what I have here, I have 4 hour creating higher highs and higher lows. So that means I'm looking for what? For bias.
For bias.
I have a break of a structure here. I know the market is doing a pullback. I have this what? My order block right here on 4 hours. So I'm going to mark up my order block. Boom. Then I'm going to go to 1 hour. I see 1 hour literally doesn't have any order block right here, but that's fine. I still have the 4 hour order block. Okay. See, you guys can see here that we have 2 breaks to the downside, 1 and 2, or even 3 actually. And that means 1 hour is bearish internally here. But like I said, it's bearish, but we're already getting into a what? Order block of point of interest. So that means we have to stop looking for sales and continue looking for buys because we still have the 4 hour bullish. Okay. So now I'm gonna go to the 5 minutes and start looking for my price action. Boom. It's gonna go here. Here. And here I'm gonna go into, okay, let's go right here. Like again here. So right now, what time is this? This is 8:35. So what we have here right now, we have a market in a downtrend internally, right? So that means we have to wait for the type of entries that we just talked about. 1, 2, and 3. Make sense? So what we need first for us to look for a setup right here, if market internally is bearish, who can tell me?
A break to the top.
We have
In
to
our
have a
favor.
break in our favor, right? That's the number one thing, because we know that market is bearish here. Okay, so here I'm gonna wait for that.
So that was a liquidity grab already. So that's what I meant before.
No. This liquidity, I mean, this not liquidity because you're looking for buys. Remember that your liquidity grabs for your buys have to be on the higher low. This is a lower low here. This is a lower low, right?
So it doesn't count.
That doesn't count. So you have to have a higher high. Okay. And then once you have a higher high, that's when you have liquidity. So here we have to wait for a break in our favor. When I mean a break, it has to be an actual break. So what happens here? We have a lower high and a lower low. Do we break above here with a body candle?
No. It's a weak transfer.
Right, so that's a weak transfer. So that means we're gonna go into this here. Okay, until I don't see an actual break, I cannot count it as a break. It fails, so that's I need to have to wait for this one now. And right here, I have the break. So now I have the break of a structure. I have the first thing, what? A liquidity grab. I mean, I'll break on my favor. What time is already here? It's already 9:20. So now I have my liquidity grab below here. Right? Because I have a higher high, higher low.
High low, okay.
Right? So that's liquidity now. So I have the break on my favor, as I said, for number one. Now I have the liquidity grab. And now I have this minor order block right here as well. But also I have this big order block that we have right here. Okay, so either one, the top after the liquidity grab is fine. So now what we need, we already mark up, we already know our bias, right? Second, we do our markups. We mark up the order block. We saw the market was internally bearish. We wait for the market to do our break in our favor. Now we mark up the liquidity and we mark up the order block right here. So what we need to wait for, market the
Liquidity
time to
sweep
trade,
and-
which is 9:30, then liquidity grab and tapping into an order block and then a price action. Okay.
Vlad,
here-
can I stop you for a second?
Huh?
I can stop you for a second. The
Go
order
ahead.
block you draw here shouldn't be from here, like from the tail.
Yeah, you can do that. I mean, what I do, I just doing this so no, I don't overlap like the liquidity graph, so you guys can see it
yeah.
here.
Okay.
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 But
Eh,
it's basically wick to wick. But
Black,
doing
wick
like
to
this,
wick,
you
yeah.
guys, so you guys can see that everything clear and don't overlap the things here. Okay.
why isn't this candle the order block? Since it's the last
No,
bearish
it's an
candle.
order block. Don't get me wrong. Like this is an order block right here. So well.
Okay.
But on you always have to wait for the liquidity grab. So you can mark it up here, it's fine. But as I have the liquidity grab below here, most likely if market grab liquidity, it's gonna tap into this one. That's what I mark up this one instead. Okay.
Okay.
All right. But you can mark it up as well. Don't get me wrong, but you cannot take it if it doesn't do liquidity. If it do this right here and then goes, you cannot take it. You have to wait for that liquidity grab to happen. Okay.
Okay.
Isn't the in that same order block that you mark now, it's another liquidity side, like this new higher
Which
low,
one?
higher low?
No, can you repeat that again? What was that?
Yeah, the next candle, the next blue candle.
Which one? This one?
You're talking
The
about
one
this
before.
one. This one.
Yeah, I don't know how to draw it. Yeah, isn't
No,
that
that's not a
the
high
new-
and low. Remember, guys, a high and low is always going to be based on
The
pullback. So
bearish,
this two candle
the
right here,
pullbacks.
and then we have this candle
The
that
lowest
start
point.
bearish, do the swing low, which is going to be the lowest point of the higher low, and then do a push here. This is not a higher low right here. Okay.
It needs another break of structure to confirm
So in layman's term, is the green candles basically going in the up direction, right?
Oh, no. Like, I don't know why you guys think like this is a higher low, but we don't do like kind of candles thing. I know that people do like use candles and use like a low of the candle, high of the candle. Here, what we need to see is like a actual leg. So here we have a push, right? Then we have two bearish candle. So that means we have a pullback. So our higher low, remember guys, in a swing low is gonna be the lowest point of the pullback that actually create a new higher high or do a double top thing, whatever. Okay. So here what we have is a pullback. This is the lowest point of this move right here. So that's why it's our higher low.
it
Makes
has
sense?
to be the beginning of the new break of structure.
Exactly.
Okay.
Or the swing low, which is gonna be the lowest point. Okay.
Yeah, I get it now.
So now what we have to do, like I wait for the time to trade. So now it's 9:25. Okay, 9:30. So that means we're in the time to trade. So now we have to wait for what? For liquidity grab and an order block top and then price action. So now market what did? Grab liquidity, tapping into the order block because we have this entire is the order block right here, right? Grab the liquidity. And now what we need? We have tapping into the order block. We have the liquidity.
We
Now
need to
we
close
need-
above
Break on our
this.
favor, minor.
Exactly. So if you would
Close
have
above
break
this.
here, it would be also valid. But for that case, we need to do something like this. Remember, pull back in another break because the stop loss wouldn't make sense. Okay. So now we're gonna be waiting. Create another lower high here. So now it's gonna be my entry here. Point. Boom. Market try to break that. That's when we try to get in here. That's what it be 30 pips. Okay, here. But of course, this have to break above here. And it would be 1 or 2 right here. They actually start pushing aggressively this morning. Right here. And this candle, would it be entering this candle, but it would be too aggressive, but anyways, when push up. So here, like say that we didn't take it here because it started pushing up and we didn't have like the chance to get in. So we break through, we wait for a pullback, maybe something like this. The stop loss still makes sense here because you guys can see that it's covered by a structure right here. So I can take it here. If it would be here, I wouldn't take it. If it do here, the stop loss, I wouldn't take it. I always do a pullback, a good pullback that makes sense for me to take it. Now I can take it here. Okay. Pullback and then the TP2 here. Boom. So back again, recapping everything. So what we did, first of all, we went to the 4 hour to make sure what we're looking at. So we have the bias, which is buy. I mark up my 4 hour order block. I understood what market was doing on the pullback, which is something that you have to keep in mind. I know market is bearish internally. It had multiple breaks. So I know that for me to look for a setup, I had to look for the type of entries, which is going to be the first thing. It's going to be a break on my favor. So once market get to the order block, I make sure I have that break on my favor at all costs. Market give me the break of a structure on my favor right here. Now I'm going to mark up my liquidity level, my liquidity spot, and I'm going to mark up my minor order block.
On the
And I
higher low.
wait for the market to get on the time of trade. Market grab liquidity, tapping into the order block, and then give me the break right here. It break too aggressively. I wait for the pullback because it wouldn't make sense to take it here. Do the pullback, get in because now it makes sense. And that would be the 1 or 2 trade here. Okay.
Vlad, I
Hey.
have a question. Why did we not take the confirmation from here? We took it from here, like the candle close. Why didn't we take this as a benchmark?
Because you didn't have any breaks here. Because you have to have actually a break on your favor. So what happens here is the market was transferring week to week. So this was your swing. Market didn't break above here. You see, it fails. So now we're going to transfer from this week to this week. And that's when market actually have the break here.
Okay.
That's when you have the break on your favor. That's the first thing that had to happen because market internal is bearish. So you have the break on your favor now. Now you have to look for the liquidity grab and the order block and wait for that everything to happen.
Hey, Vlad. Regarding, I use for another broker, it's Rwanda, and you say I have the break on my direction. Then the grab liquidity is not in the second, as you can see. On Wanda you have a difference, and the grab liquidity is in the last down candle.
Which one? This one?
No, the other one. In this one, because the other one was above. Didn't grab the liquidity on one that is another broker, different prices.
Yeah, that's why I recommend you guys to look for TradingView, something that looks similar to your broker. I do black bull market, and that's the works the best for me on TradingView because they're always gonna have different prices and everything. But if you have, for example, a broker, like say any broker, I don't know, and you look out for something more similar to that broker, that's gonna be the best thing on TradingView to look for this type of thing because it's really important to understand what market actually grab liquidity. In this one, as I use black bull market, for me, it grabbed liquidity right here. For you, maybe your broker grabbed liquidity here, which is also fine, you know? But you have to make sure that liquidity happen, you know? In any broker that you're working on, you have to wait for that liquidity grab. Sometimes it might not show it on your broker, but it might show it in, like say in TradingView, something that a lot of people use. And at that point, that's why I recommend you to do something that looks similar to your broker, but you have a lot of confirmation for you to use it as your your analysis chart, if it makes sense.
Hey, but if someone were to have used this as the order block and use this candle as the liquidity, that still would have worked, right? Because this
No, can
order
you
block
mark it out because I don't see anything, bro.
Oh, sorry. So this order block here,
Yeah.
and then you mark this as your liquidity.
Yeah.
It will still, because I'm saying
it wouldn't be valid anyways. Even though if it didn't tapping into this order block, it wouldn't be valid because you're tapping into this one. Okay. That's what you're asking, right? No.
Yeah.
So it wouldn't be valid anyways because you have an order block right here. You know,
yes.
Like say it wouldn't tapping into this one, you still have a water block tap. So you have liquidity, which is a sweep liquidity, and tapping into the order block. It respects this order block, so it's still valid. So it wouldn't be the same thing. A break here would it be valid for you to take the buy?
Exactly. All right. Thank you. That was what I was thinking too, because I was still thinking about what you said about having your
order block and your liquidity on the same
or even close to the price, right? Because
exactly
at the time we were marking, this candle right here was closest to the price. I guess what I was playing in my head was if I could engulf this candle with my order block, and if my not my order block, my liquidity, and if my liquidity could be below my order block. But thanks for clarifying.
All right, that's fine. And also remember, guys, that this is liquidity, but if market would have done this, just in case, instead of this candle holding here and stopping here, would it do this right here? And would it close below here? Are we still buy to take the buy?
Yeah.
Right? So yes, we can
Yes.
take it because that's swipe liquidity here. And as far as the market doesn't do another lower low like this, boom, then we can take it. If market do that and do a double bottom, for example, and do a break, you can still take the buy right here because this all part of liquidity right here. If it makes sense.
Yeah.
So
Okay.
in this case, Vlad, we took, let me see, the buy here, because when these candles went up, was the beginning of the candle and went so crazy. So you have to wait for the retest, no?
I didn't take it here because it was like the first minute of the first 4-minute candle just pushed like that, and I wouldn't take it like that. So that's why I wait for the pullback right here. But if, like, say, would it be like around here? It would be like we still have like 2 minutes left for that candle to close. I would have taken it before the candle closed, but this one just started pushing aggressively, and it wouldn't be a good thing to take it, you know, with 4 minutes still going for that candle close. So that's why I wait for that candle close and the retest, and that will basically the entry here. Okay.
For you to decide that when was the moment in the end of the retest, it's more about the stop loss have to make
exactly.
sense, no?
So I wouldn't take it here because the stop loss doesn't make sense. So as soon as I saw that I'm here and I have my stop loss pretty good cover, I said, you know what? I'm gonna enter positions. Like that's basically what I did. Enter a couple of positions and saving couple once market do a retest back again here. And if you do that, then I would take my the rest of the position on the retest 100%, and that would be my stop loss below here, you know. And I wouldn't move the entry that I have here. I wouldn't move the stop loss here. And like I said, you're gonna be risking a little bit more, not too much. But I always try to do like the stop loss based on the last entry that I have. Okay.
I have one more question. When you decide to draw this, like, is your line for entering? Like, is
that's
where
basically
you're
where
gonna
I'm
take your
looking for the
entry?
market to break above here and close above it. Okay.
Yeah, what I
As
mean
I
is,
say, it doesn't have to break above the week because we already have too many confluences. So for me, this is like anticipation break because we actually have the break when it breaks above this week. But when I break above here, it's like I'm taking like a resistance and break through it. It's gonna use as support. That's basically what I do here. And as I have too many confluences already, I know by just having this break above this minor resistance that I create here, it's gonna be enough for me to take the buy. Okay?
that's perfect. Yeah.
All right.
Vlad
It makes sense. Go ahead.
No, is Blackpool allowing you to take trades directly from TradingView?
See, yes.
Okay. All right. Thank you.
But I don't have it like that. I have it with Metaphor, but they actually allow you to do it with TradingView account. Okay.
Okay.
All right.
But I have a question. Like here, am I audible?
What's that?
Am I audible?
Yes, we can hear you.
Yeah. I have a question. Like here we have the green candle, right? A bullish candle.
Yeah.
So here we have the black bearish candle, and we have sweep the liquidity, and closing above here will be fine. We can take the trade.
Yeah, they would have taken the trade. That would be fine.
Okay. Like we mark this minimal. Like we have the bearish candle, and closing above it will be the fine. We can take the trade. Correct.
Yeah, but you have to have this. I mean, this bearish candle confirmed like a minor resistance here formation, like a level of break. So it have to break. It doesn't have, like I said, it doesn't have to break above the wick. If it breaks, you guys can see like I mark it up like this because I want the market to close above the body. So if I have this candle right here closing like this, just a small here, not too small because sometimes when you do like that, it might be like kind of, you know, not the best close. But if you have like enough body close above here, then that would be a full confirmation for you to take the buy or the entry. Okay.
Okay. Thank you.
Any questions about the entry here? You guys get it? What we did here? Everything?
So
Yeah,
is
we
it wrong to I'm sorry, just a quick one. So is it wrong to think so the break of structure, it happens here, but occurs here, but then we should mark the level like here and wait for this level to be broke? Do you think that's like a, can I wait for this confirmation?
If you wait for
Instead?
that, definitely you're gonna be taking you're gonna be missing a lot of entries, and the entries are gonna be huge. It's gonna be higher and lower.
Your stop loss, yeah, and the stop losses will be far, you know.
Yeah, yeah. So I mean, like I said, I know where you coming from this question, but guys, I've been doing this for 3 years and a half, and I have more than I think 600 or 700 trades already taken, and I think on bot testing even more. So you don't need to wait for this break right here. You have too many confirmation. You wait for a break on your favor. You have the order block. You have the direction on your favor. You have a liquidity grab. You have an order block top, and you have a second break right here. That wouldn't be enough for you to take the buy. So taking it above here,
cool.
that would be something that you can do, but that wouldn't be a good entry on my eyes. Okay, and on the eyes of the strategy. Enough, it would be breaking above here. You should be good to go to take it. Okay.
Okay. Thank you.
All right. Any other questions? We can move into another example.
Yeah, sure.
So on US 30 right here, just remove that. On the US 30, we're gonna look for what market did. Okay. So when we go to the 4-hour, right here.
Market looks bearish.
Yeah, I mean, it looks better. I mean, it doesn't look bearish. It's bearish. Two different things. It's actual bearish. Okay. So when we have here, what we have, always understand how many breaks market has done, so you understand if you're bearish or not. So we clearly here have break number one happens to be here, right? Break number 2. So we have 2 breaks to the downside on the 4-hour. So that means we're bearish, right? So we're looking for sales. Okay. And market go to this order block right here. We have this 4-hour order block right here. Okay. And then we have, let's go back into today. So here what we have 1 break. So that's our first break. So we're still looking for sales. Why? Because we're bearish. 1 break is just what? Liquidity grab and a pullback. So it's gonna be a confirmation of a second break if market break above here with a body candle in actual close above it. Okay. So this morning market try to go up here, boom, and go to the order block, and he fails to create the second break. So are we still looking for buys? I mean, are we still looking for sales or looking for buys here?
We were looking for buys today, honestly.
Yeah, but I mean, based on what we just talked about, because like I
Yeah,
said,
it's
there's
a
people
sell.
on the group that doesn't know the strategy.
Sells.
So based on what we talk about on the boot camp, what we're looking for here.
So it didn't
Sells.
break the structure with a body candle. So
was a liquidity sweep, so we're still waiting for a confirmation for sales, no?
Exactly, for sales. Remember that we have 2 breaks to the downside. So for us to get back again into bullish, we need to see 2 breaks to the upside on 4 hours. So here we have 1 break, that's fine, but here market fails to create the second break, so we're bearish still. Okay, and market goes to the order block right here. So what we're gonna go into now, we know the bias already. So I'm gonna go to the 5 minutes right here. So what do you see here on the 5 minutes? If you guys can tell me.
It reacted in the 4 hours, 4-hour order block.
Yeah, but what we see on the pullback. What you guys
We're going for a liquidity sweep.
No,
Break.
but
Yeah.
I see internal
An uptrend.
an
internal
uptrend.
uptrend,
So
yeah.
internally we're bullish. So what we need to wait for a setup, market get to our order block and give us a break on our favor. That's the first thing that we need to look for. So that's what you have to always keep in mind. Okay, I know I'm bearish. I'm gonna go to 15 or 5 minutes. So what I'm looking at on the pullback, I have multiple breaks. Okay, so I'm bullish. So I have to wait for the market to get to our order block. And the first thing that we have to wait is for a break on our favor. So we start looking for liquidity, order block, and then price action for us to take our setup, okay? So right here, what we have, market tapping into the order block, and we have what? A break in our favor right here. Make sense?
Yeah.
So what we need to do, mark up liquidity now. Where's liquidity? Here, right here. Boom. Where's order block? Right here. So now I'm looking for sales. So I have the break on my favor. So I need to see market grab the liquidity. So let's wait. Right? So what market did here? Is this a lower high?
No, I didn't. Wait.
It is a lower high.
Yeah.
It's not kind of. It's a lower high. Because remember that I said a lower high, it doesn't matter if you do a new lower low or a new swing low. It's still a lower high. Because this is lower than this one.
Okay.
Or not? So that's a lower high.
The body did pass the green candle.
It doesn't matter if you pass it or not. It doesn't matter. I mean, it's gonna be a lower high, about a lower high, which is gonna be a lower high that create a swing, and that's gonna be a buying when it comes to a structure. But when it comes to a liquidity, that's a lower high, even though it doesn't do a new lower low. So that means on the lower high, you have what? Liquidity. All right, let's go to 15 minutes. Okay, let's go here. We're still fine. So now we have to wait for liquidity grab. So market grab liquidity. Did we tapping into an order block right here?
No. I mean,
no, because there is no more
exactly. There's no order block right here. So we have a liquidity grab, but no order block. So there's no setup for us, even if it breaks below here, because we don't have a confirmation. So that's fine. So we have the market have done, not having created a new lower low here. So we don't have any order block. So market's respecting this here. So we don't have any order block right here. Okay. Our order block had to be a level that market create a new lower low. So this is no order block. Okay. Our order block is continue to be this one right here. Or yeah, basically this one right here. Okay. So right now we still have liquidity here. We can move our liquidity to here because still a lower high. And we wait for the liquidity. Okay, market grab liquidity. And we have to wait for the market to give us a tapping into an order block. Okay, so we have liquidity. Did we tap our order block right here?
No.
All right, so there's no setup yet. Okay, I cannot take it.
I think in 15 minutes we can have the order block.
No, we don't have our order block right here on 15. See? So we're still missing here, the order block top. So that means we don't have any setup yet. But that doesn't mean we're looking for sale. We're still looking for sale. So what I do is, okay, I have the liquidity grab, I have the pull, but I don't have the order block top. So I cannot take the trade. So what I can do is just wait for the market to create another break right here, grab the liquidity, and give me the order block top that I'm looking for. So right here, what I'm gonna wait for is gonna be a break right here. Let's see, like here we have a break. So that means what we have. If we have a break, we have an order block. We also have an order block right here, and we have the liquidity above this level. Okay. So now if market grab the liquidity and tapping into the order block, now we can take the setup. Right here, market basically went down and didn't tap into the order. I mean, sorry, let's go back again here because I missed something right here. Think right here. You go back again.
Another break of structure with another order block.
So we're already here. So we're looking for a order block right here. We didn't have an order block. That's why. Okay. So the order block would be here, but it didn't grab liquidity right here. So, okay. So yeah, at that point, we didn't have like the liquidity. It should have been here and respecting this order block or respecting this one. Grab the liquidity and take it here. Okay. That's the setup here. Even though it play out pretty good here, we can take it because it never tapping into an order block right here. Okay.
Isn't the next lower high liquidity? Okay.
Which one?
This one right here.
Yeah, that's a lower high liquidity, but market never
then
market
is-
never grabbed the liquidity and tapping into the
Oh.
order block.
Okay.
Yeah, because here market continue pushing aggressively to the downside. So here we have everything that we need. The only thing that we were missing was that order block tap. Maybe if we see the 3 minutes, maybe we have an order block right here in 3 minutes. But I don't recommend you guys to go for this 3 minutes order block right here, because they don't work that much. Okay, but you guys can see that here we have the liquidity, order block on 3 minutes that we can see here. And that's why market grabbed liquidity, and then it would be the entry would have been breaking below here. Because you have the liquidity grab, the order block tap, and then the break on your favor. That would be the entry here. But for me, I wouldn't take it because that 3 minutes order block, I'm not gonna be using it. I need to see 5, 15 order blocks to be tapped. So I never had any order block right here. But you guys can see that we mark up the liquidity, market grab the liquidity, never tap the order block, so we don't take the trade right here. Make sense?
Mm-hmm.
All right, so let's go for another example here. I think like we're gonna have some on the sales here yesterday. Gonna clean this up right here. So same thing. We have on the 4 hour yesterday. What we have? We're gonna take all this because it happens today. So here what we have. Right here. We have a double bottom, and this is what? A lower high. Remember, for you to have a lower high, it doesn't have to have a new lower low. It could be a double bottom, but if it's a lower high, they have liquidity on it. Okay, so we have a lower high which have liquidity here. So even though we have a break here, it's still liquidity grab because one break is a pullback or liquidity. So we're still on a sell market right here. I'm gonna go to the 1 hour. My order block, the near one, is gonna be all the way up here in the 4 hour. We'll go to the 15 minutes, and I have a 15 minutes order block right here. Okay, market that I'm tapping into the order block right here is fine, but I see market grabbing liquidity. So I'm gonna go to the 5 minutes. I wanna ask you guys something. How you guys see the market here internally?
Bullish.
All right, so what we need to
Momentarily
wait for?
bullish.
An order block
Like a
and a break
fraction.
in our favor, right? So here we don't have any order block. Okay, so that means we don't tapping into any order block. So what we need to wait for is either market tapping into the order block or create his own order block, which is gonna be giving us a break right here, creating the order block, then creating liquidity and tapping into the order block. Okay, so now let's wait. Okay, I don't have any tapping into the order block. It's still bullish, but I need a break on my favor. Okay, market's just playing around
So
here.
Black,
Yeah, why?
why isn't this candle an order block? I'm about to let me mark it. Why isn't this an order block right here? This candle.
Yeah, it's an order block, but are you looking for buys
Okay.
or sales here?
So just marking the sale or the
So yeah, so like I said before, if I'm looking for sales, I'm only gonna mark up internally. I'm gonna only mark up the order blocks for sales, not for buys. So for me,
Gotcha.
this
Okay.
is sales. So I mean, this is buy. So I'm not looking for those order blocks right here. Okay, I want to wait for the
Okay.
market to give me a break and form an order block for sales because that's what I'm looking for. All right, so here we have the break. Fine. So that means we have what? Break. Now we have the order block right here on 5 minutes, which is gonna be here. If we go to 15 minutes as well, we have also 15 minutes order block right here. Right here, boom. And now what we need, we have the break in our favor. So now we have to wait for the market to form liquidity or grab the liquidity above here, which is gonna be this level right here or above here, and tapping into an order block and then give us the break. Okay, so we're gonna see. So what we have here, if you guys can tell, oh, whoa. Chill out. Right. So what we have here, if somebody can tell me.
Lower high.
A lower high, right? So that means we have what here?
Liquidity.
Liquidity.
Liquidity, all right? So I'm marking liquidity here. So I have the break on my favor. First in, I know my bias. Now I have the order block markup. I have the liquidity. We're already at 12, so that means we're still on the time to trade. So now I need to see the market grab a liquidity, tapping into the order block, and then give me an entry. Boom, market grab liquidity. You see, we'll go to the 15-minute order block. So we have liquidity, tapping into the order block. Now, if market breaks below here, we can take the trade. But like I said, if it doesn't make sense with a stop loss, we need to see a second break for the stop loss to make sense. Do we want to take it here with a 40 pip stop loss because this is US 30?
It's not in time, no? It's not.
Yeah, it's the
30
time.
yet.
We're basically 12:30, 35. So we're basically on the time to trade. But you guys gonna be taking this trade here,
No.
right?
No,
Because it doesn't
there's
make
no
sense
way.
with the stop loss here. It doesn't.
Yeah.
So we need to wait for another break.
All right. So market push, you guys can see, do it as easily being a stop out right here. That's why we don't take it like that. So now I either wait for the market to break below here to take it, or market create another level right here and give me a second break. The second break doesn't have to be below here. If you do a minor lower high and break here as well, it's gonna be fine. That's a second break here. Okay.
Glad? Isn't this yesterday's trade? Isn't this yesterday's trade?
Yeah, this is the yesterday's trade. I took a buy
but-
here
Yeah, we
because
took a buy
market
here.
never tapping into the order block right here. I was looking, as I have the 1 hour order block, I was looking for a kind of trend trade. And that's why, like, I took it because I know how to take it. But I'm just showing you guys how to basically go in with the trend. So
but
here,
why,
as I have
why are
two
we
breaks.
going against the trend then? Like, why are we going against the trend on live?
I mean, like I said, when you have two breaks on the 1 hour, and you have the 4 hour bearish and 1 hour bullish, you can look for momentarily buys until they get to a certain level of interest. So that's why I look for the buy, because I told market it was going to go to this order block right here. Make sense?
Oh.
Yeah, because we are bullish in 1 hour and bearish in 4 hours. So
exactly. So that's basically what I just been telling you guys. That doesn't mean you have to take it like that. But if 4 hours bearish and 1 hour internal is bullish, you can look for buys momentarily until they get to a certain level of interest. That's something that you can do, or just basically stay with the 4 hour structure. Okay.
Okay.
All right. So here I'm showing you going with the trend, no going in against the trend. That's why I didn't pay attention to this entry here, the one that I took, and I'm showing you the one that is with the trend. Okay. So back again here, we have the liquidity graph, right? We have the order block top. We have the break. That wouldn't be a confirmation for the entry, but why we didn't take it? Because it didn't make sense on the stop loss. So now what we need to do, we're either going to be waiting for the market to form like a kind of structure here for us to take it, or breaking below here as well to take the entry right here. So we're going to wait. So right here, what we have, a level of break. So now if market breaks below here, I can take the sell. You guys can see we have the break. So now we can take the sell. Boom, 40 pip stop loss. I think there was news yesterday, but I'm not sure 100%. So if there was news, then it have to be 50 pips. But let's do 40 pips here.
Where exactly the break occurs in here?
This area here.
Where here you see? You say?
Yes.
Yeah,
where
this
the
candle, I
exactly
think.
this one?
Here you have like the lower, you have a lower high, higher low, double top thin here, and it create a minor support right here with this two candles basically holding. So like I said, like we don't have to wait for the market to break below here with the wick. If it close below the body, that will be enough for you to take the setup. So that's basically when market breaks through here with the body candle closing below the body here, it's a confirmation for the sell. You take
one
it.
simple break. One simple break, like a.
And what I call is that basically anticipation break, which is anticipating the market is gonna break through it.
Okay, got it.
Here. But like I said,
Oh.
it's gonna be you're gonna see this type of breaks, but you have to wait for everything else to align, which is gonna be your bias, liquidity grab, order block, and then that break is the last step. You have a bunch of confirmation already, so that simple break right here is gonna be enough for you to take the trade here. Okay.
Okay. Thank you.
Vlad, I have a doubt. Like here it is break the break, and we can take it as like retest, like retracement, and can we enter the trade here?
I mean, it's the thing is like if you take it here, you don't know if market's gonna continue going up. So waiting for a second level formation and then a break of that level is give you more confluences for you to take the setup. Make sense? Like because if you take it here, who tells you that market's gonna stop here and it's not gonna continue going up? Nobody. But if you have a market doing a pullback and create a minor level right here and break that level, your confirmation is going to be way higher than just taking it on the pullback. Make sense?
Yeah.
All right. And that would be the setup right here. Same thing, liquidity grab, order block top. We didn't take it here because it didn't make sense on the stop loss. We wait for the pullback. Market create another level here for break. We take it. Why we take it here? Because we already have the liquidity. We have everything here. We're just waiting for the small break. As the market breaks below here, it wouldn't make sense. Then I wait for this minor break to be happening here for me to take it. And that was the setup right here. Any questions before we go?
Just 1 second, Vlad. We were able to take it from here, right? According to this one, but our stop loss will be a bit far. Because this
Yeah,
is
you
more
cannot take it
confirmation.
here. Because if you do it like this, then you would get stop out, right?
No,
Because
no,
your
I
stop
mean,
loss is not.
if wait for this candle here, this one, because if you can see this one, I think close below this area. So this can give us like a confirmation to sell. Yeah, exactly here. That's what I'm talking about.
I mean, for me, would it be enough here?
Okay.
Like I said, I only need I have all the confluences. I just need another break right here. This is one break, and then the second break right here. The stop loss makes sense here for me. It's a good confirmation here. I take it here. But I mean, if you want to take it here, that's up to you. But here would it be the perfect entry, to be honest. Okay.
Okay.
Any question, guys?
Nope.
I have one question. We're gonna someday in a few weeks to trade in live, like gold in Asia.
We can trade. We can try to do that. The only thing is like, based on the time that we do the mentorship and the boot camp, most likely we're gonna be able to do the analysis only, and then based on the analysis, then we can see next day if we actually end up playing out what we want and everything. But like trading on live, most of the time it's gonna be 2-3 hours, literally waiting for a setup. And I have basically mentorship after this time, and I can do that, But we definitely can do the markups and everything, and then we just basically come back the next day and see what happens with everything. Well, one thing that we're gonna do is like do back testing using FS replay, which is gonna be the same thing as trading, but it's not about like looking at that if you win, if we lose. We're just gonna be working on understanding everything that we're looking at here: liquidity grab, order block, and the break. So you guys can get used to this, because I know some of you are still kind of still doubting about like some breaks, and that's because you guys maybe come from some different information. But everything that we see here, like those kind of breaks like this, are you okay? Why didn't we wait for this break right here or breaking below here? Is because it's kind of new to you. I understand that. But by doing the back testing and doing like more examples like every single day, and you guys also taking your own trades on demo or funded trading by your own, you're gonna start seeing that when you see those kind of breaks and this kind of confirmation right here, it's gonna be enough for you to be looking for the setups, and you're gonna start seeing the good results along the way. Okay.
Okay.
All right. So yeah, guys. I see you guys on Monday. Tomorrow we just off. It's Monday to Thursday. So go through the videos. I'm gonna send this video so you guys can review it. Go through the videos. Check everything. Do your own bot testing. Go to do your trades on live. apply everything. If you have questions, just let me know through the chat. And we're coming back on Monday to do back testing and literally just doing this over and over again until you guys get it 100%. Because as I said, I know there's a couple of things that might be new to you, and you guys still like, okay, you know what? I didn't learn it like that way. But one thing is like I always tell everybody, if you guys haven't been consistent until now, you know, give it a try exactly as I'm teaching you right now. Exactly as I'm teaching you, because that's when you're gonna have the chances of be successful and be consistent faster, okay?
Okay.
I think you can, once you get the link of the video, you can go and you can download it from the link that I sent you.
Yes, you can.
Yes.
You just have to go through the website.
Hey,
Once
Vlad.
you, yeah, go ahead.
Oh, I was gonna say, please don't forget to send us the TradingView template we mentioned at the beginning of the video.
Yeah, sure. I send it over so you guys can have it.
Thank you.
Hey,
I have one. Sorry.
Yeah, go ahead.
can you go to the yesterday in 4 hour? There is no break in 1 hour and no break. I think you explained day before yesterday. Having a 4 hour order block and it got reacted and you took the trade
Which one?
here. Yeah, this order block. This order block, and I think you took trade around here in this candle in 5 minutes.
Yeah, because one thing that I saw was this is all kind of trend tricks, and I do mainly do this because, like I said, and I don't want you guys to do this exactly like I'm doing it, because one thing that I have is a group of people that are actually waiting for setups. So sometimes I had to take trades against the market structure to be able to give trades to those people that are on the trading community. Okay, but if you're trading on your own, you have to be patient and wait for the setups that are most likely going to be the best, which is going to be with the trend. So I took this trade because market dropped too much, basically on London and in the early on New York. Go to this order block, and I knew that for me to look for a good setup, most likely, you know, I had to take a kind of trend trade for me to be able to catch a good move right here. I don't know if it makes sense, but I did that because I have people that I had to give trades on the live trading, because if I wait for this to go up, maybe it's gonna be after the time that I'm basically with the live trading. Make sense?
Yeah.
I don't know if it makes sense for you guys.
Yeah.
It's like basically what I'm telling you guys is like the trades that I took here, the exactly trade here is a kind of trend trade. It's not a trend with the trend, because the trend is still bearish. So I take it just because I know most likely market's gonna move. Maybe it's gonna do the sale after maybe 2 p.m., which is gonna be way after the time that I can trade with the guys, and that's what I look for a trade, kind of trend trade. But I recommend you guys to go with the trend, because you don't have to pressure, you don't have to wait for anybody. Nobody's gonna tell you to send a setup. So you have to do the things basically with the trend, which is gonna be a way higher probability setup. Doesn't mean that taking a kind of trend trade is not gonna work, because if you know how to take it, you can be making good money. But at the beginning, before you get consistent, it's better to go with the trend 100%. Okay.
I have a question, Vlad. This is more a personal question, asking for a tip. According to your success to reach the point of having a big amount of money, or according to the capital, what will be the tips starting from zero, with funded accounts, and all the money you get from the funded accounts, prepare your own capital till you reach some point? Talking about that, okay, you
for
want to
me,
reach.
I can give you like tips based on, you know, what people had done it, like in another way, because the way that I did is like, I come from other background. I come from e-commerce, affiliate marketing. So before getting in Forex, I was already a millionaire. And that's something that, no, I don't know if you guys know it, but if you go to my Instagram, you're going to see like affiliate marketing, e-commerce from 2018. I was already making millions. So I already have the capital to put $100,000 on an account once I learned exactly what I was doing, you know, because I burn out money as well, learning. But once I knew what I was doing, I put a big amount of money. So what I recommend you guys to always do is like right now, if you don't have the capital to put like 100,000 or 50 grand or like a big amount, is always to go with the funded and try to get the most money as you can and then move it to a personal account so you can start trading with your personal account. Because right now, how funded accounts are and just all those companies are right now is kind of messy. What's happening. So I
Looks
recommend you guys to
temporary.
make the most money as you can from then and then move it to a personal account and then start trading your own money because it's gonna be way better. Okay.
Okay, so goal 1 million in own capital, right? To make 100K a month.
1 million not. You don't have to have that. For example, my account right now is 600,000. So that's what it's sitting right now. So
600.
all depends on how you risk. I risk sometimes 6%, 7%, but like you don't have to have like $1 million account. If you want to do 1%, but when you're on your own money, you know you're a skill, then you risk more than 1%. I don't know if it makes sense.
No.
When you're doing like a small account, for example, like 5,000, you're not gonna be risking a 1,000. I mean 1% because definitely you're not gonna make any money. Then you have to be risking 10%. But it's different because you don't have any rules, you know, and all depends on your skill. So when you have a personal your personal money, you can definitely be more open into risking more, and all depends on your abilities. Make sense?
And when you organize, so you play from the beginning to the end to the month, and then you withdraw your profit and you leave
No,
only
I do
600K.
weekly withdrawals.
Oh,
Weekly.
okay. You play always with 600K, right? That's your.
Yeah, that's what I'm sitting right now. That's basically what I'm letting the account there, sitting 600. I have one bigger, but like everything that happens, you know, with the broker, I was using my account with you know, with my information of United States, but everything started getting, you know, banning everybody. So as I moved to a new broker, which is still a good broker, then I dropped my money and I started, you know, building up that account until I get the trust of the broker. And that's basically what is sitting right now, 600.
I'm sorry, I'm asking so much. This is my last question. I don't know if one of the days you could give some tips about financial advices according to withdraw the money. I don't know if you just work with LLC in USA or.
Now you had I mean, if you're in United States, then definitely you had to have a LLC. That's
I'm
basically
Spain.
how I do it.
It's 54% taxes here. In Spain, we pay 54% of taxes. That's crazy because I have my own company now, and that's crazy.
I mean, that's a lot.
Yeah, I'm thinking about to move into Dubai or something like that because it's bad.
Yeah, a lot of people move to Dubai. I still have a good accountant where they do their best job for me to not pay too much, but I still pay enough, but not too much, you know. But it all depends on your accountant, you know. I pay good amount of money for my accountant to do the work.
Till
But definitely you have to
30%
pay
is
anyways,
okay.
but not that much, you know.
Yeah, but 20-30% is okay, but 54 is bad.
54 is a crazy thing. No, I don't do any more e-commerce. I still have my business with doing affiliate marketing, but not e-commerce anymore. I stopped doing e-commerce like 4 years ago. I just do right now affiliate marketing, like a low key thing.
Sending offers. Just advertising offers.
Yeah, affiliate marketing. It's basically, I mean, this different thing like this lead gen, there's cost per call, cost per lead, like there's different things. So right now I'm doing per call. So it's kind of the same thing, but it's affiliate marketing, which is getting calls to business and they pay me a commission for the call that I generate for them. All right.
And you're using Facebook ads for it or Google ads?
Yeah, I have Facebook ads, TikTok.
We need to extend the bootcamp to another investment, like another 4 weeks talking about e-commerce.
Yeah, I mean, I used to do e-commerce, like I said, millions of dollars, but I mean, it's a lot of work.
Your Instagram ad pops up on my feed like every day, even though
That's crazy.
even though I'm already with you.
I was like, who is this guy? It's like I know him for a long time.
Yeah. So I was doing e-commerce. I was doing pretty good, but I mean, e-commerce is a lot of things like chargeback, a lot of suppliers things. It was like kind of crazy thing. I was still doing good money, but not like I'm doing right now because On my best, I was doing like 25%, 30% out of the revenue. Okay. So it was doing $1 million. I was doing like maybe 200,000, 250, on my best. But no, now if I make 100,000, I'm still making 100,000. So it's a different thing,
And there's months you do like 500,000 profit. So what else?
Yeah, sometimes that's basically what I'm saying. Like it's different money.
Yeah.
So yeah, I do investment. I do more real estate than Bitcoin and things like that. I don't like to do Bitcoin. I used to do that, but not anymore. I put my money like on real estate and things like that, and creating other businesses that make me 6 figures a month. So yeah, like for example, affiliate marketing. I also have a business of moving. I don't manage it. I have people that do it, and I just get the cut of the profit at the end of the year. So but I do my investment on business, like things like that, and real estate and things like that. Okay. So yeah, guys, I see you guys on Monday. Like I said, review the information, go back and forth, do back testing, trade tomorrow. Just try to apply this strategy. And once you guys some questions, just let me know. I'm gonna be here. And Monday we're gonna go back again and start doing back testing and everything. Okay, guys.
Thank you.
Thank you, guys.
All right, guys. Take
Bye.
care.
Very
See you
much.
guys on Monday.
Have a
Thank
nice
you,
weekend.
guys. Have a good one.
Bye-bye.
Bye.